Good evening, everyone. This is Henry Gamble with SimplerOptions.com, and in today's free video I wanted to share a little bit of the way that I think about charts as you move into earnings. Three of the primary companies that are set to report this week are UPS, Starbucks, and Apple. And while I'm not going to get into personal opinions about each of the companies at all, let's instead just think about some of the technical aspects of some of these and what I think will save you money in the long run by just avoiding them. Now with UPS, this is an interesting one because it's had a very significant run off the daily chart. Obviously, it rallied very nicely with the S&Ps, and you've got earnings that are due up this week. Well, how do you play it? Because you look at it, and from one perspective, it's very bullish. But then if you step back over to the weekly chart, you'll notice it's come right into extensions of previous major swings. But once again, the squeeze is fired long, putting bullish pressure on the stock. Ultimately, these are the patterns that I think are best avoided because they're at a very difficult technical place to try and play them. They're bullish, but once again too, you can't argue that there's plenty of overhead baggage up in this area. So I think those are best avoided. And then we're going to look at one more example that's very similar here in Starbucks. Is this something that you want to get in the way of? Absolutely not. Shorting new lifetime highs, it's not any kind of way to try and make money in the markets. Not to mention you also have a weekly squeeze that is confirmed and in full-on long mode. Well, then you'd say, okay, is this where I can buy it? Well, for a conservative trying to make steady, good income, I think you have to recognize that you have made a major extension here as well, and you just don't have any edge in trying to play it to the long side. Now to get on into the third, and of course we have Apple earnings that are due out Tuesday after the bell. This is something that I think, at the very least, and that, bullish or bearish, you can kind of make your own argument for Apple, but at the very least there's a little bit more two-sided action. So from this chart, and especially if you come down to the daily, I just like looking at the way that the current prices, where we're trading in our current prices, and if you look at the expected move on this, so into the end of the week we're expecting about a $7.50 move. Okay, if we're trading that from 115, then that gives you a pretty decent area of support back down here around 108, 109, and it's a good technical area of support as well. If we were to flip this and say, okay, $7 from where we are now is going to land us back up here around 123, 124, and you've got the 200-day moving average that's just in front of that. So I think this is a better opportunity to say, okay, here, if iron condors are your thing, you can look at maybe doing some of those. I have a little bit more bearish take on Apple, so I'm going to look to play it down into 112, but I'm not looking for it to break these lows. So at any rate, I am looking to play Apple to the short side. I think it's going to be a little bit more of a better place to find technical levels to work with and sell premium against than UPS and Starbucks. I hope that gives you guys some insight to apply to your next earnings trade, and I will see you at the next free update.